The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, 11 o'clock till noon Eastern. And great programming. I hope I can keep this up. And let's see what happens through this hour. Why? Because this is a pretty critical time. You'll see by this 10-minute E-mini chart that I've got here, there was a head and shoulders in not only 120, not only in the 10-minute chart, but it broke the neckline, and that neckline suggests that you can go down quite sharply, and we have. So just yesterday at 9-ish, when was it, 9 o'clock? Let me just double check. Where did we hit that? At 2140. So 2140 was on the 6th. Okay, so we went to 2062 in the E-mini, and we're now trading at 2038. So there's almost a 30-point decline. And what's really important about this pattern is it comes at a very critical moment, and I'll explain why as we move along. Let's go in order. The Dow's down 166 at 17,549. So, okay, let me just show you the 120-minute chart because I'm going to get rid of this. This is the 120-minute chart of the E-mini. See these H patterns that have become an M pattern? There was a shoulder, head, and shoulder pattern right there. You can see it's almost the same thing in the daily chart. So in all time frames, you made a peak D in the E-mini in the Chapman wave with negative technicals, very bad. You made the right shoulder failure pattern right there at the 2062 level at 8 o'clock last night, and then turned down. The negatives, the technicals are still negative, but you've got tremendous support at 2033, which is the 200-period exponential moving average, which corresponds to 2034.25, the low of at 4 o'clock on the close of the 5th, meaning Tuesday. It's a weekly chart that we're looking at, and we'll see that in all the different time frames. Let me see if I can grab this. Yep, I got it right. Here we go. So the Dow. The reason why I want to take a little time, and I want to take some calls, but I'll take them a little later. It is such a critical phase because we are matching something that I showed subscribers over the weekend, and then again to my opening call subscribers Monday, Tuesday, Wednesday. And this is what we're following. You see the Dow made a peak F top, and this high at 17,648 on the 22nd of March had very good technicals, just turning down, but very good. Even the on-balance volume was good. Look what happened when you made that high on the 1st of April. The surprise, that was a real April fooler. You spiked to 17,811. The MACD's lower than it was, hasn't crossed negative, but the stochastic is way lower. That is a pattern that is doomed, as far as I'm concerned. There are a couple of other indicators I have here that we're confirming, which is the reason why we've been short and adding to shorts. We still have some long positions, but we've been adding to shorts. And now you've got the break above the trend line in the weekly chart, one bar, and we'll see if on Friday, tomorrow, there's a close anywhere underneath, and that would be anywhere under, say, 17,560. But I can tell you this, that if Friday at the close, it's options expiration, they can do anything. Yesterday was a huge up day. Today could be a huge down day. Tomorrow it could just be neutralized, or it could be anything. They could do anything they want. My suspicion is the damage has all been done. At best, it's just a narrow trading range tomorrow. At worst, you actually continue down. We'll have a look at the template in a moment. But in the meantime, this is the low that you've got to be watching, 17,434, the low of last week. Monthly candle, well, the monthly has a ton of weeks to go. So all we can say is it stopped right at the trend line resistance, and we'll leave it at that. Now we're going to go to the SPX. I'll just do them in line, and we'll get them done quite quickly. This is the sandwich effect. It's a technique I developed a long time ago You got a very big, strong green or red candle, followed by a very strong, maybe even stronger engulfing candle, and then the same color as previous. So this is red, green, red. What happens next is absolutely imperative, and my subscribers will be looking at that real closely by the time we get to 4 o'clock today, because no, just discussing it now, because anything can happen. You can close right at the 2053 level, the 9-period moving average, and that kind of negates that particular pattern. So in the meantime, the S&P, I should do it now. I've done it in the daily chart. I should be putting a down arrow here. I will put a down arrow with that high on April the 1st at 2075.07, 2075.07. Now, the reason why I'm doing that is that the stochastic has gone under 80%, the MACD is down, and you've got a very strong close below the 9-period moving average and a failure pattern today. You can close higher, but you've already gone under that 9 EMA within 3 days. And that to me is usually not a good sign. And the weekly chart is underneath that major support level. Right now, that support level is at, get that pointer, there it is, 2093. Okay, monthly chart making that arch formation, but it's sort of, let me lift this up a little bit. It's kind of holding there. So the monthly, you got the whole of April to go. Okay, now let's go to the QQQ series. Peak F because it recycled, and what am I talking about? This is a recycled peak D. That's what I should have said. Sorry, that's a D. And because of, look, you went peak D, and Chapman wave instant restart, A, B, C, and that happens to be the new D. Okay, so we can take that away. Oh, I'm just going to leave it for now. Call it a D, and the Qs are way below the any downtrend line. No, shouldn't say that. Join that line to that line. Okay, here we go. There you are. Okay, yeah, we're on the line. Let's call it on the line and turning down. The monthly chart is still very good. So the Qs, to get a sell signal in the Qs, you really need to close at 109.23, down 144. You need to close in the 108.40s by Friday or Monday. Bouncing us is, okay, the IBB did pull back. We'll talk about that in a little while. And question in the den, I'll get to that. A couple of questions. So here we go. IWM. Did quite a lot of work on this over the last 4 or 5 days. Just trying to decipher it. Is there a Chapman wave oval? No, that's not an oval. So this is going to be very important because the IWM is at 109.11. It's down 106. And because of that, you need to see it decisively below the low of yesterday, 107.64. Actually, it needs to get under 107. It needs to go to the 106s. Only then will I be satisfied that the Russell 2000 is starting to weaken. Let's go to gold. Gold is up $17.90. This is a very nice move. It's an inside buy with an A to B. This is peak A going to leg B. Very nice action, still within the lower boundaries, but it is nice. It's holding the 9-period moving average. I want to get to crude oil. Here we go, crude oil. Crude oil is not up 17, that was gold. Crude oil is down 85, and I'll be back with the dollar and bonds straight after this break. Basil Chapman, Tiger Conditions Hour. Dow's down 157.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. And to top everything off, what's really interesting about this is the surprise factor. I might be wrong, but my guess is that there are very, very few people, individuals, but there are even fewer fund managers that are actually short the market right now. Because if they were short, they would have had to cover. And yesterday's move just knocked them for a loop, the 1st of April and yesterday. But if you're looking at certain factors, by the way, I've got INO up here, question the Dan, what would I do? It's Innovia Pharmaceuticals trading at 937, down 11 cents. Looks fabulous, but it has made a peak F. I would give it a little room. At the high was made at 990 on the 4th. It's pulled back. The 9-period moving average is at 890. I would just give it a little room because it's got leg C. It's acted completely independent of the biotechs, even though obviously it must be in the pharmaceutical biotech area. And it's in leg C in the weekly, and I would have a target right here of 1083. So I'd rather pull, I don't want to point now. I would rather have it pull back, see how if it holds the 890 level. If it breaks that, then 855 to 810-ish. That's the area where I think it can consolidate it. That's what it likes to do. And then see if it can go to leg D. That's a much less risky trade. The other thing is, Peaky and the Dan, you could just nibble right here at 940. Why? Because if it breaks above a 990, it goes to like a recycle. And then what it does is it kind of raises the base a little bit on the next pullback because it is ignoring what's going on. The biotechs, the IBB, went spiraling up yesterday. It's now down 5 at 280. So I'm saying to you, it's acting independent. It doesn't even know about the biotech area because it seems to do its own thing. So that's INO. So that's my recommendation there. And don't get carried away. It is a bio stock and anything can happen there. So a couple of questions I had, but let me first go to the dollar DXY. Making a low at this is an F, leg F to the downside. But what's really important, remember we spoke about this over a week ago. I said in this arch formation, I even drew it here. If the left side is taken out and it closes below that and it doesn't close above 94.58, the dollar index, in the next 2 days, it's going to go lower. And that's exactly what it's done. So now you have to wait for an actual buy signal. And if you're looking at gold, gold is acting very well in relation to what it's done, because it's in a consolidation between the high that was made at 1287 and the low that was made just last week at 1207. And all I can say is at this particular point, it's holding the uptrend, that inside track, Chapman Wave inside track support level. It's above it now. It's above the 9-period moving average. Stochastic has improved. The MACD is turning around. It hasn't crossed positive, but I've got a lot of signals to say that it will completely break down if gold in the next week and a half takes out 1207. Just make it as simple as that. And right now, it is the place I think that many people want to be in, just because it seems to have a safety factor. Okay, got that out the way. Now I just want to look at the TLT, because the safety of bonds, I know it sounds funny, bonds at 132.79. What I'd said about a week ago is if bonds go to the 132.50s or higher, watch out for the downside in the market. Now I can start talking about the market, which is what I've been wanting to do. Let me show you something here. This is the Dow chart that I send my subscribers every day. I wonder if I can just get this going here, because I think the only way I can really, you don't really have an idea of what people do with their calls, etc., and why they make the calls, unless you can actually follow them, which is one of the reasons why in my workshop the other day, last Wednesday night, I went through a whole scenario of what I'm looking at and why I thought that there should be a market pullback towards the 17,000 in the Dow area. And then we might have a very sudden, strong rally for whatever reason. And that's the one that has to either take us to all-time highs, or we make a little zigzag and we start down a little bit deeper. That's going to be really important. So if I can just show you this, let me show you this one here. Wait, where did it go? Good grief. Did I just erase that? Give me 1 second to look. Oh, there it is. Nope, that's not it. Not that. Did I? Oh, there it is. Okay. So this is what I showed subscribers. Whoops, let's move it across to the side. What I said was there was a match with the peak F in the Chapman Wave, the 6 highest peak F at 17,977 back on the 3rd of November. It was 50 days from the low of August the 24th to that November 3rd high. And we took from the January 20th, 50 days. And we also made a peak F. And what I'd said is, are we here? This is on the 6th. That was yesterday. Are we here? And that's the candle right there, that third candle, which had a low and then spiked high and then closed a little bit lower. Instead, what we did is on the third candle, we went much lower. And then, boof, had that great move to the upside. And now, and then I put, are we here with a question mark? And the reason is, if you look at the MACD, the moving average convergence divergence, right there where I've got that vertical dashed line, pink line. And if you look at the stochastic turning down, if you look at the on balance volume with that little W at the top, the M-shaped pattern at the top, look what we got. Failing MACD didn't cross negative just yet on the first. Very poor stochastic. And the M-shaped formation in the on-balance volume, which also went, this is the blue line, peak A inside, peak A, B, C, D, E, right there, and an F, and it corresponds. And that F actually, it's an E, and then the F just about failed. Right there. So we had a whole bunch of technicals to look at. And now, this is what we're looking at. And that's what I do every single day. I spend a lot of time on the analysis, and there's only one reason why, because I want my subscribers to know why I'm looking at something, what I'm looking at it, why I want to do what I want to do, my reasoning, and then the chart formation that we're following. And here it is. This is the 50 bar bi-mode completion to a peak F, 50. There was also a match. Here's the other thing that we're looking at, the match between, perfect match, between that top that was made back on May the 19th at 18,351. We also had the same series of kind of a slow rollover, then bam. So this is very important. We might make a match. We might take some time. I don't know. But chart patterns match because human personalities repeat the same patterns over and over. And the market is a conglomerate of the price point of human emotion. And that's all it is. And this is saying this is where we were yesterday. Now we've made a lower low. So far, an ugly candle. Hey, the day's young. Options expiration tomorrow. Anything can happen. But look at the MACD and the stochastic. So I wanted to show that. I wonder if I should do this. Yes. Now, I also wanted to show you, have no idea why I get these scratchy throats, because I feel fine. So what we've got is a recycle on the TLT going to leg C. I want to show you something else, and this is really important. I probably shouldn't show it to you because it's so soon into the position that we took, but it is so important that I think I need to just show you a reasoning and why I did it right there. So as I'm going out, I'll find the chart. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 177, S&P's down 21. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So this is what I'm looking at now, the Dow down 164. Going back to this 10-minute chart, look, we made a trough F, and from that peak F or a trough F, that's where you can expect that there could be a bounce. But we haven't made it to the 2034.5 round number low that was made at about 10 o'clock on whatever day that was. Good grief, on the 6th, I think. So there's a beautiful arch formation. I love these arch formations. And now you're getting ready. There should be some kind of a bounce to the test of 2041 resistance of the 9-period moving average and the E-mini. So here we're going. Apple, question about Apple. look, Apple made the peak F top. Remember we spoke about the trough F, we spoke about peak Fs, and here we are. Peak F top, that's the sixth highest peak from the low that was made around about 92 at the end of March. And here it is. It hits 112.19 and it's pulled back, but it's holding quite well. The weekly chart has improved a lot. Stochastic, if the stochastic was at 82% instead of 74%, I'd say, you know what? Apple has a potential Chapman wave squash, but it doesn't because the stochastic is still too low. But it has held well. I still think that Apple's made a hat-trick top, and it needs a lot of time to digest the gains. In between, you can have these bounces to the 200-period moving average. Now it should hang around, but I can just tell you this, that if Apple at any point goes underneath 104 in the next 2 weeks, you got to be real careful because there's a gap between 291 to 385 back on the 15th of March. It'll probably try to fill that. So this is a very important moment. Not only that, if you're looking at XLU, I was asked about the S&P Select Utility Spider Fund. Look at this beautiful U. We've seen so many of these U-shaped patterns. We saw that in the dollar. You remember 49.78 was XLU Select Utility Spider Fund high back in January of 2015. Plunges down to 42, I think it was, 40.80, September of 2015. Rebounds to where? To the high of the day on April. Was that also the first? 49.88, yeah, double top, 49.88, 49.88 with a G/C. That G is another technique that we have. When you get to a G and you get the alternate count, or there's a very simple way of looking at it. And at this particular point, I'm almost certain that I want to call it a G with a down arrow. I'm going to give it the full day. Let's see what happens. I can just tell you this. It'll be confirmed. If it doesn't have to close. If it goes under 48.31, I'm putting a down arrow. Now, this is the big thing about the XLU. Leg F in the weekly. And again, an F. Wait a minute. Whoa, don't get excited. Because look, the MACD is still quite good. The stochastic is holding very well at above, it's at 92, 95, well above the 80% level that I always consider to be where you got to be careful. So I wouldn't be surprised if it pulls back a little bit, test the 47.81 to 47 area, and then that's the real test. How does it hold if it pulls back about a point or two from here? What if it doesn't pull back, but it makes the H pattern trying to get back to the recent highs? So how does it stand right now? Because the monthly chart has a whole 3 weeks or so to go. I don't want to get in the way of this other than to say the technicals are good, but they haven't confirmed an all-time high. It's all-time high? Yeah, all-time high in the utilities. So at this particular point, if you are long the utilities, I'd stay long, but I'd start putting in two stops. One is a stop to take it for a little bit if it closes under 48, and another stop to take a little bit more if it closes under 47. You could always put it back. But this is time for money management because the weekly chart feels like it deserves a breather. That was that. Now I want you to do this XOP. The Spider S&P Oil and Gas Exploration. Sideways actions down 24 cents at 29.98. Had a tremendous move to a peak D, a convoluted move, but it's a peak D. Weekly peak B and holding so far the 9-period moving average. So I'm looking at this. I'd like to give it another day or two. I haven't really done anything yet for subscribers in the oil and gas area. I'm inclined. I know how these things can move. They can fake out real easy. They look great, and then bam, they go to lower lows, or boom, they go to a higher high. So I'm in the area right now of saying the weekly is flattening out, making the H to an M pattern, rather large H pattern, let's call it. Stochastic is at 81. There are some good signs, but with the stochastic at 81, the MACD is still rallying. Yesterday into tomorrow should have seen a move that goes above 31.68. And that says to me, hey, don't be fooled. This could just be a sideways move at this particular time. Here we go. I'm looking at, so that was the XOP. Option exploration. Oh, I haven't seen that. That was a good question. Option expiration. Oh, it's next Friday, April. Of course it is. I don't know why I keep thinking it's, it's. I've spent more time than I've spent in ages on this market, because when you've got a template that is fitted so perfectly, but you have to wait for each day, and each day has been a surprise to the downside. I've just spent hours and hours and hours on this darn stuff. And I usually don't. I mean, I spend a lot of time, but I usually know what I'm looking for. I'm just spending time giving areas that we're looking at and what is working and what isn't. But this is different. This is the major indices. So thank you, Bill. Yes, you're absolutely correct. Sarah, W pattern bullish, but you said, look, all right, let me see. Okay, yeah, good question. So here's a question Sarah asked. On the Dow, INDU, there's a double. Yeah, this is very much like a W pattern. I really didn't want to mess up the chart. I've got it on Triple M. You remember Triple M? A very clear W formation. I made it so thick that I didn't have to be looking at all the other stuff. And even now, Triple M is only down 22 cents. It's holding. We've got a real mixed market here. But GE was the clue for me. Look at this. GE made a peak F top, down 18 cents at 30.72. No big deal. It went to 32.05, but I think it's in a rest period right now. That was the clue for me. So let's go back to the W formation. Sarah, I'm going to draw it in now, only because you asked about it, and I'm going to draw it. I'm going to make it thick, and I'll get rid of it as soon as I'm done, because I really don't want to mess up my charts. Make that like that, make it thick, make it nice and thick, make it very thick. I'll keep it, no, I'll make it blue. Blue is the one that seems to stand out the most. There you go. Okay, so we're going to do that twice. And we've got one here and one here. And that stops right there. And then I've got myself another one, new, and we'll swing it this way. So there's your W pattern, but we haven't broken to the left side high. That's going to be the big question, don't you think? At least for me it is. And that's the reason why I cannot rule out that we aren't going to make new all-time highs. My thinking here is it after a bigger move? Is it like later in the year? And we're going to like the first month or so of 2017? Because I don't have my major top signal just yet in the real estate. I'm real close, but I haven't got it. So let me just show you something. It's probably going to pop up right now. Let's go 14. Here it goes. There it is. You see the left side, right side price time match? And that says that 18,351, the week of the 3rd of June, if you're going to look at matching time frames and all that, is a possibility. I don't even how could that be when you're going to have the two major parties in absolute, who knows? I'll be right back. Basil Chapman, Dow's down 145.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and I just want to do one thing here. There it is. I hope I can get this right. Yeah, have a look at this. Well, let me get rid of that first of all. Let me get rid of that. Oh, I can't get rid of that. Well, then I can't show it. All right, I'll tell you what it is. I just got an email from a cousin way back in South Africa. And I'd sent her an email that I got about elephants. It's just the most fantastic thing on elephants. She just sent me something back, and it says, penguin swims 5,000 miles every year for a reunion with the man who saved his life. So you've got this little penguin brought to you from a beach in Brazil. Oh, I can show it to you. There are. Can I? Yeah. All right, have a look at this. I think so. Yeah. Look at that. Right there. Isn't that a beautiful picture? This man with the little penguin. And it says, today's most heartwarming story is brought to you from a beach in Brazil. It's the story of a South American Magellanic penguin who swims 5,000 miles each year to be reunited with the man who saved his life. Retired bricklayer and part-time fisherman João Pereira de Souza, 71, who lives in an island village just outside Rio de Janeiro, Brazil, found the tiny penguin covered in oil and close to death, lying on the rocks on his local beach in 2011. Howard cleaned the oil off the penguin's feathers and fed him a daily diet of fish to build his strength. He named him Din Dim. Isn't that amazing? And every year it comes back to visit him. You know, boy, get away from politics for a second and you talk about the penguins. What a lovely thing we saw last night on, what's it, Nova? About the otters. Anyway, so let's get back to the market. All right, enough recreation. A couple of questions that I didn't answer. WLL and SWN and the XOP. So I spoke about the XOP, but let's look at, what was it? WLL. And thank you. Yes, options expiration is next week. I don't know what was in my mind. WLL is Whiting. Oh, I remember following this way back. I did the notation and everything, but it's disappeared. A, B, C, D made a perfect peak, E, and then kabam, from the 90s, it pulls back a little bit. It comes back down to $3.35. It's trading now at $8.63. You know, this is worth looking at. The kind of move you saw in the IBB stocks, and I don't think the IBB is done for now, although, as I said, our very long-term short from 393, just off the top, was taken out yesterday at 281.10. So we had a 111-point profit, 28%. But we had bought the BIB, which we got out yesterday. So there was a very nice, we got out this morning, I'm sorry, with a raised stop. A really nice gain. So I'm not seeing anything. Whoa. Yep. Okay. Now I see it. Sorry, that was a mistake. Al, my wonderful engineer, kept me on track. So WLL, yes, it's acting well. Let me get back to that in a moment. Let me get to the callers. Tim in Denver, how are you?
Hey, how you doing, Basil?
I'm well, thank you.
Oh, good. I was calling in on the, you started to cover the IBB a little bit.
Yes.
I was kind of playing with that yesterday and this morning. I started shorting. I used LABD to short the IBB.
Okay.
And I bought that yesterday and sold today. But what do you? I just kind of wanted your view on. You might have already covered the biotechs, and I apologize if you did. I didn't hear earlier.
You know what? I just touched it as Al reminded me that I had some items that I was missing. So I only just started it. But basically, what we're looking at, folks, if you don't mind, I'm going to cover it now. I don't know if you can see the charts right now, Tim. If you're looking at Tiger TV, on the left is the daily, in the middle is the weekly, on the right is the monthly. That's the IBB I'm working on right now. So the IBB made a leg D, and what I had said this morning, of course, was we're looking to reshort the IBB, but I wanted to raise the stop on the BIB because I expect that there will be a leg D to come. I just didn't want to give too much back because it was a fantastic move over a day. I can't even remember now how much it was, going from just about 44 to 48.20 for it's about 10% in a day or so. That's really good. So what I wanted to do is I'm holding back. I'd like a little bit more of a pullback. It might not happen. We'll see. And then I'd like to play leg D. My target is 290.53, which is the high from the 25th of January. So I would not get too carried away about shorting right now the IBB. I'd rather let this play out a little bit longer. The stochastic now didn't pull back today. It's very important. If the stochastic at 90 closes more at 87 as the IBB pulls back from 282 right now down 3 to 279, I'd say then now get ready because there's a chance that you get a leg D to the upside. And my suspicion is that this market isn't going to go down, the general market isn't going to go down much deeper than where it is right now until we get the conclusion of the IBB going to a leg D, not in the weekly chart, that's a leg C, but I think in the daily. So here we go. I'll feature tomorrow the IBB because it's still in play for us, but now it's in play more for the upside action. I really wanted to keep the BIB, the 2 times long, but I thought, a good profit it's important. I'm trying to build up a kitty so that when we reshort the IBB, because my target is on the IBB down to the 220 to 200 level, I want a little bit of cushion, and I'm going to try to build it up so we can build a bit of a cushion in case we're wrong. So I would not do anything. I'd be looking, I don't know what if you want to use the L's for the 3 times, that's fine. But I would just say to you, if you're using the IBB as a benchmark, you might have to have a little patience to see if it can get to 270 to 280, between 280 and 279, and then you can start a position. And if it starts to work, I would add to it. If it doesn't work because it pulls back a little bit, I wouldn't hang around because this is a very important moment.
So you're looking for maybe IBB hitting 290, something like that, 290.
Between 288 and 291 would be my target. That doesn't mean to say it has to stop there, but that's my actual next target. I've got a left side, right side price time match, which says by the 11th of April, that's the area that should be hit.
Great. Hey, thanks, Basil. I agree. Thanks.
Thank you very much for calling and good luck. Let me know how it goes. Tim in Denver. So let's go to Brent in Martinez, California. Brent, how are you?
I'm doing wonderful, Basil. How are you today?
I'm well, thank you.
Very good. I liked your story about the penguin. It's nature's a pretty amazing thing. My son and I went to Yosemite last Friday, and just to be at the valley floor looking up at a 2,000-foot high, solid granite face is pretty impressive.
Whoa. Wait a minute. You look up, and as you're looking, all of it, we were there the summer after, it wasn't even summer, it was like the spring after it had that major water, all the huts at the bottom were covered in water. You remember there was a major flood at one point, a long time ago. We were there straight after that, and when you stand there looking up, what do you see? You see these little ants. The people climbing the rock face, right?
Yes.
Hey, we'll be back. We'll look at your stock. I think it's DSX as soon as we get back. Folks, the Dow's down 144, S&P's down 17. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back, and we're on with Brenton Martinez, California. We're looking at DSX, trading at 2.61, up 20 cents. Diana Shipping Inc. I have to ask you a question. Of course, we've got limited time, so I'm going to ask you to do it in a limited way. Brent, what made you pick this one?
I actually was hoping you could look at two, and I'm not sure we're going to have time today. Maybe you can do it tomorrow.
Which one?
One is NMM, so Nancy Mary Mary. It's Navios Maritime.
I have never seen this before. Oh, at 132? This is a slight... would you mind if I just switch and I go to that one?
Sure, go ahead.
So, folks, we're looking at N for Nancy, M for Mary, M for Mary, trading at $1.32, up 9 cents. This is for Brent and me, but no one else, because these are dangerous when they $1.32 stocks. You have to have a plan. You have to know about them. You got to look at volume. You got to actually have a look. I sometimes have, when I do these little ones, I have a little trial to see how quickly I got in and how I got out, because I don't want to get in and not be able to get out. They always let you in. So what I'm saying is at 132, it looks as if it's acting very nicely. I would say that most important is it must not give anything back between now and tomorrow. This time tomorrow, if it's trading below 127 to 124 support, I wouldn't want anything to do with this. It has to work right now, and it is working. So if you're long, or you're already long, right?
I did get in on this yesterday.
You did. Okay, so now you've got a profit. I'm just going to say I would covet that profit. I would not give anything back. It's not one of those that I want to give a little room because it needs a day or two to build. It's got to do it right away, especially in this kind of market, because most of the other shippers are not doing anything like this. So this is actually very nice on a very short-term basis. So I'm just going to say to you, keep it, make your stop tight, and I'd have a trading stop on half my position at about 127, so that's 5 cents. Yeah, someone heard us talking. It's already gone to 133. If this takes out the left side high of 138 from the 30th of March, I would have a trading stop on part of my position, or I grab it at 130. What did I say it was? At 138, 139, I'd take something off immediately, and then I'd let the rest run. So treat it as if it's just a bounce. Why? Because if it takes out the high of 174 in the next week, that's going to be leg B to the upside. It'll be the first decent move it's had in a long time. Hope that helps you.
It does. I just had one real quick story, Basil. You were talking about El Capitan and people climbing it.
Yes.
Back, my oldest brother's a rock climber, and this is a while ago. Back in the 80s, he climbed the face of Half Dome.
Yes.
And we went up the backside of it to meet him, as he made his ascent to the top. And he couldn't make it in that one day. He had to spend the night on the face, and we were there for him in the morning. But I don't know if you've ever been on top. There's what they call the visor.
I've seen pictures, but no, I've never been at the top.
Yeah, natural rock outcropping, and a part of that visor is they call it the diving board. It's it looks like a diving board. It's about 2 foot wide. It goes out about 3 feet. You can crawl out on it and look down 2,000 feet. That was
unbelievable.
Pretty, makes your stomach a little weak when you do that.
I've seen pictures of people sleeping in the trees there. They're like 2 trees or something, and they sleep in the. It's amazing. I don't know how they do it.
I spent the night on top. There's not much up there. It's pretty barren.
Yeah, there's no McDonald's, I guess. Okay, what can I say?
All right, take care, Basil. It was great talking to you.
Thank you very much. So, folks, as we're wrapping it up, don't forget you got your swim lesson coming up. Watch the volatility index. It's only up 138 and up 9.79. I want to see it close today or tomorrow above 16. I think that's what we need to have some confidence that this is not just a bounce or a ricochet, but it's got some move to the downside, and the VIX index, the volatility index, has upside endurance. Otherwise, it's pathetic. So this is good for now. Please check my opening call newsletter out. I think you'll find it very illuminating, and we've had some really nice trades here, because sometimes you have to be on edge, and we are on edge. Folks, stay tuned. I'll be back later this afternoon with Tom O'Brien.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.